All right. Can you hear me? Hear me all right? I don't know if my computer fan is on too loud. For me, it sounds loud, but I don't know if my mic is picking it up or not. Oh, shoot, this chair's stuck. All right. Perfect, perfect, perfect. I'm about to get started. A lot of static on the video or the sound. That static might be my fan. Hmm. I'll have to work on that later. As long as you can hear what I'm saying, it should be all right. But again, this video is really for my own records. So with that in mind, let me go ahead and get started. I am going to delete all of this stuff and start over. Hmm. Yeah, I'm going to delete this. All right, start with a clean sheet, clean slate. So we're going to start marking up the highs, which is the buy side liquidity. And the sell side liquidity, just down here. Then we have price chilling up inside of this range. So in this range, let's mark up some key points here, and we'll go from there. All right, so we have a gap right here. There's a daily fair value gap. Let's mark that up. And also, seeing that we have this range from the buy side to the sell side, let's go ahead and measure this up and find the 50% area of it. That is a very relevant spot. Oops, that's close enough. Let's go 50% consequent encroachment. Get rid of this. Yeah, let's go ahead and get rid of that for now. Come back to it if I need it. All right, so marking that up, reason for that is inside of this range from this high to this low, anything above the 50% is considered a premium. Anything below it is considered a discount. When we're in the discount, we expect price to go back to a premium. When we're in premium, we expect it to sell off and come back down to a discount. So it's good to keep those levels marked up, so that way on the higher time frame, we can look at price action to see where are we within this swing high and swing low. And the swing high and swing low is going to be relevant until one or the other is broken. Until then, both of those levels are being respected. So get back in here and see what else we see. There's a lot going on. It's a big gap here, which is considered a volume imbalance. I'm not going to mark too much stuff up because I don't want to have my chart cluttered like it was a little while ago. That was from a lot of previous back testing. Like I said, I'm starting with a clean slate, so it'll be a lot easier to see what's going on. So what we got here is a break of structure, meaning this was the most recent swing low of this price section here. Once we have a candlestick close with a body under that low, that's showing that the market structure have shifted to the downside. So once we have market structure shift to the downside, we start looking for sell side liquidity. And the fact that this happened in a premium, that's aligned with the notion that when we're in a premium, we're looking for price to go down to a discount. So seeing this on a higher time frame and seeing that we have the candlestick that broke the structure actually left a fair value gap. So it would be nice to go ahead and mark that one up as well. There we go. Drag that over, identify it. So that's another daily gap. And as you see, we got price come up on this daily candle, came up, tapped the 50%, and then took off from there. So now we're down here in a discount. So seeing we're in a discount, we want to look at where price is at now and look to the left of that and look for any price action to the left that could be a PD array that price can potentially react off of or respond to. And immediately to the left, our attention is drawn right here to this volume imbalance. So that is definitely something I'm going to mark up. Like I said, I'm not going to mark everything up that I see. I'm going to just try to mark up the stuff I see price reacting to, so that way I can keep this shit as clean as possible. So I don't have too much stuff going on. It's easy to mark up everything. All right, so I marked that up because we got a body that came down, did not close up under the 50%. The wick came up under it, which is all right. That's allowed. The wick went down and did the damage. The body is telling the story. So the body closed above at 50%. So that's showing that this is support. So if this showing support, we have this next candle, which is today's candlestick, opening at the top of this volume imbalance. That's also indicating that this area right here is some support. So seeing that, we're going to watch it and see what do we have on the top side of this 50%, which is a premium. What's up here that price can be possibly reaching for. And right off the back, I see two things. Well, really three. We got another volume imbalance right here, which I'm gonna mark up. We have liquidity above this high right here, and then we have this order block right here. So that's three different confluences that price can slide up to and react to. So let's go ahead and mark those up and see what price do with that sometime this week. Preferably early on in the week. We want to see that happen Monday or Tuesday if it's going to do that, because looking at this is looking bearish overall with this breaker structure. With this high being intact, we have price come up to it twice and could not get above it. The bodies are way under it. The wicks got close, but they couldn't get up above it. They barely look like they barely got above the body. So they struggled to get up there and then dumped real hard. So this is looking like bear sentiment. We got this fair value gap right here. That price did close above, but came right back up under and closed under it and broke structure. So to me, this is looking bearish. And we got all of these uh, all this bearish price action or bearish confluences that price will have to get through to get all the way back up here. Um, let alone this fair value gap here plus this order block. So this is looking real bearish. And then with all of these confluences being in a premium, that's aligned with the bearish sentiment. So let's go ahead and finish marking this up real quick. Let me stop bumping my gums before I lose track of what the hell I was doing. All right, so that was a daily volume imbalance. We have some buy side liquidity right here. We'll make this one a little smaller. Take up too much space. All right. Then we also want to get the consequent encroachment of that wick, so that could be another area of resistance. So we're going to measure this from the top of the wick to the top of the body, and that will give us the middle of that guy. Let's get this out the way. I don't know why, but I like the color 50% green. No real reason for it. It's just to help to be able to see exactly what it is. Move this to the right, in the middle, right. All right. So this right here could be another area that price could come up to, and we can use this as information to see, do we get just a wick above it and a body close under it? If we get that with a daily candle, that's a decent indication that this here is some resistance and it's above this consequent encroachment of this whole run down. So I'll go ahead and look at that as an opportunity to start taking some shorts. So we have 50% of that wick, we have this buy side liquidity, and this order block. I think I'm gonna move these for now. Let me get these out the way because I want this order block to show right there. Now let's mark up this order block. Yeah, it's already starting to be a lot on here. So let's go ahead and mark that up. So it's a daily. Got a 50% at an order block aligned perfectly with the bottom of this fair value gap. So that's another confluence right there. So I think that's enough for right now on this higher time frame. That's enough to see how price react respond to. We got this one too. I'll go ahead and mark that one up too. Since we've closed under it, let's see if this right here can act as resistance. So we got a whole lot of things that can hold price down on top of all the uncertainty on the other side of the world right now with oil and all the tension and all the different talks that he say, she say this. Don't nobody know what's real and what's not. So the markets don't know what the hell to do. What is that? Daily volume values. All right. I'm cool with that for now. So we're going to leave that alone. See how price react and respond to this. What I would like to see is this. If this was a trade, this is what would be expected. Entry on the 50% of this. Stop loss would be above this high, which is the candlestick that left the fair value gap. 3 times the amount of risk would be the target. That would be somewhere right here. Come on, man. Like that, man. All right, so that would be somewhere right there. This right here would be the ultimate target. Seeing that we wasn't able to take out buy side, and we're breaking structures to the downside, this right here looked like what we're reaching for. We got relative equal lows up under here. We got a volume imbalance right here. I'm gonna mark up later. I ain't gonna trip on it right now. We're gonna wait and see what price do. If price start coming down here, we're going to mark this up. We got this big old gap right here, right up under these relative equal lows, and we have this bullish order block that was not visited at all. After this printed, price took off and ain't came back. This came close to it, but it didn't touch it. So this is like a bookmark. ICT say price is gonna want to come back and tap that. So that right there is a long-term target. I'm gonna go ahead and mark that up. So this is a daily bullish order block. Let's see if price try to reach that. But looking at this, if this was a trade setup, this would still be a valid trade. We're nowhere near the stop loss, and we haven't hit the target yet. So what I would like to see is for price either with today's candlestick or tomorrow's candlestick, either or, it don't matter. But I would like to see price to come up into this area, react and respond to one of these bearish PD arrays, and get a reaction to the downside for the rest of the week. So that's what is anticipated. Don't have to happen. If it don't, it is what it is. If it do, hopefully we can capitalize off of it. So that's on the daily chart. We're gonna drop down to the 4-hour and see if we can refine some stuff. Let me get this out the way. All right, try to clean it up real quick. So when it was on a daily chart, this down move was 1 fair value gap. Drop it down to the 4-hour, you see it's 2 now. Price came down and the bodies is respecting this one, but this wick came up and tapped into this fair value gap. Barely tapped into it though, but respected this 50% of this daily fair value gap. So let's see what we got in the most recent price action that's being respected or disrespected. So we got this low right here. This is a swing low. So let's go ahead and mark that up real quick. It's not deemed a break of structure yet. Hold on, let me finish marking here. We'll just put sell side liquidity for right now, because it's not a break of structure yet, because no bodies have closed under it. We just got wicks. So until we get a body closure up under this, That's not a breaking structure yet. So we're gonna just wait, see what price do with that, and then go from there. Now, looking at this price action, we do have a good, solid, strong breaker structure right here. So let's mark that one up. We got a breaker structure with some displacement to the downside. Down the bottom, this one black. All right. So we got a breaker structure, fair value gap right here. Buy side liquidity here, buy side liquidity here. So this right here would be a nice area to see price come up into and respect. So let's go ahead and instead of drawing a box, I'm gonna put some lines right here so it don't get too crazy. So with that being the top of the gap, we're gonna make that one blue. Then the bottom of the gap, we're gonna make that one black. We're gonna label them as such. Alright, so we're on 4-hour chart. So 4-hour, where you got below. We're gonna put this to the right. And then label this as the high. Oops, hold on. All right, so these areas, but you know what? Hold on, I'm slipping. Let's get to 50% of it. I'm so used to using the box do it automatically. Putting the lines, trying to keep it sharp. Clean. I gotta put mine down 50%. All right. So this is what I'm gonna pay attention to. I want to wait to see what price do once it appear, if it can get up there. So having that notion, having this concept, this idea, utilizing this information that I have here, seeing this sell side liquidity sweep, not a breaker structure yet, seeing all this up here as basically like a magnet for price, I'm gonna drop down to even a lower time frame. I'm gonna go down to the 15-minute and see if I see anything setting up down here that can potentially push price up to this area. Let me clean this shit up a little bit. Every time you drop down for some reason, you gotta readjust it. Making charts to be clean. It's a little time consuming, but it's worth it at the end of the day. You know exactly what the hell you're looking at. I'll do the rest later. Do that later. So let's make this a little bigger. Him hiding in there a little bit. Be able to see. Bet. All right, so we got a little bit of consolidation down here. So let's look at this and see what we can make up out of this real quick. Not for something that we're gonna execute on now, but just see if we can find something that's aligned with the bias of price wanting to draw up into this area. Go ahead and zoom in on it. Again, what is it? 15-minute chart like that. So understanding market structure, what we have here, we have a low. And then we have a high. Not looking at what's going on to the left. We're starting here. We're starting with this low. This is the lowest low in this range right here. So we have this low, and then we have a high. We have a higher low over here. This low did not take out this low. After this higher low was printed, we created a new higher high. That to me is some bullish sentiment. That's telling me that price is trying to reach up for something. So what I'm gonna go ahead and do is mark up these lows and highs real quick, just to help it paint a picture, make it make a little more sense. We're gonna make these small since we're on smaller time frame. All right, so I'm at the low right there, and I'll probably delete these lines later. I just want to just paint a picture basically. All right, so we got this high. We got a break of structure above this high. With that break of structure, it left a gap. Hold on. We got more stuff going on down here that I left out. We gotta give everybody some attention. Hold on. Come down here to this little break of structure too. Yeah, we got a lot going on. All right, hold on. With the phone. We got this order block down here. Image disrespected with these. We got this fair value gap. And this is Friday's price action. Yeah, we're gonna drag that over too. Come on. I like to mark up gaps that price done reacted to. If it's in the past, but price done reacted to it a couple of times, then that's a relevant spot in price. So you can expect price to react or respond to it again. And if you look, when it came to it here, we consolidated in it. Dumped down up under it, we came back to it, it blew past it. Came back to it, got a closer under it here, came back above it, it shot up. Came back down to it here, it couldn't even get all the way up in it, didn't even get to the 50%. And couldn't even fill in this gap all the way and starting to run up. So this is looking like a nice, healthy little support area that would be good to keep watch of, just to see how price react or respond to it in the future. So that's why I'm marking that one up. And we got the highest high up here. That one's worth marking up. I might make this line bigger. I got too much going on already. Give me a minute. I'm doing this on the fly. I'm analyzing this shit and seeing what I see on the fly. I have to take my time with this part, just let whatever jump out at me. I see that there was a couple of trade opportunities up in here, but I'm not trying to look at this for trade opportunities. I'm trying to look at it to get information that's aligned with the bias of price wanting to draw up here. So that's why I'm just looking at market structure, marking up these lows, marking up the highs, seeing which ones are being disrespected and which ones are being respected. So far, the lows are staying intact. The highs, can't say that so much. The highs are getting disrespected. These right here are internal liquidity, and these are external liquidity. All the external liquidity ones from the downside are being intact. The external liquidity for the upside, those are getting beat up. The inside, both of them is getting beat up. We're not paying attention to those. We want to see what's popping with this one We want to make sure this one and this one stay intact. If they don't stay intact, we only want a wick to go up under them if we are to have price come up here. Unless price get up here first. Price get up here first, then it can go ahead and run down and disrespect all this down here. But for right now, we want to see this area maintain its bullish sentiment until we at least get up to the area that we have marked up from the higher time frame, which is this area right here. So let's go ahead and mark up the most recent price action and see how it's respected going into tomorrow. Big old 15-minute fair value gap right here. What is this? Sunday. Okay, so this is the market open. So this was Friday. This is Sunday. It's a big run up. It's usually a indication that that's the way that the market want to go until it grabs some buy side liquidity or run up into a bearish PD array, which is that big ass fair value gap from the hard time frame. So we're gonna mark this one up because this is a break of structure. We got this body closer above it. This wick, that wasn't it. I ran above it, came down, closed. That would have just been a liquidity grab. But as soon as we got this body closer above it, that locks us in as a break of structure. So when we start looking at price action up under it for some kind of inefficiency, such as a fair value gap or some sell side liquidity, or both, to see if price going to react or respond to it. We got that right here, this big 15-minute fair value gap. Price came right here down to this 50% and took off. So we're going to simulate a trade right here and see if it play out. And that's going to be my analysis for early part of the week. And what do you know? It is in this area. Is that a coincidence or what? So we're going to hold on to it. Well, not hold on to it, but we're going to just end it there. 15-minute on the weekly analysis is pretty much low as you really want to go. Anything under the 15-minute, 5-minute, 1-minute chart and all that, you're looking for entries for like intraday setup. So 15-minute is pretty much lowest I'm going to go on this. If not, I'm going to have way too much noise on here. So this is my bias for the week. If this get disrespected, cool. It is what it is. We get a body closure up under here, then I'm going to start looking for setup for a sell. If this trade right here is respected, we get price run up into this area. I'm going to go back to the higher time frame and see what the 4-hour candles are looking like and the daily candles are looking like in this area. If we show that these price areas is getting respected with wicks and bodies closing up under them. Hold on. Yeah, this area right here, you got the buy side liquidity here, and this fair value gap, and this order block. So no, matter of fact, that's higher than what I have marked up. We're looking at this first. We have this volume imbalance, we have this buy side liquidity, and this order block. Price shouldn't come back up here. This was already dealt with this candlestick. So we want to see what price do in this area. So that's what I'm gonna be looking for to give myself a bias for the rest of the week. Oh, look at this inversion fair value gap too. Did I mark that? That looked good. I did. Okay. So yeah, we want to see what price do when it come up in this area too. All right, bet. Yeah, this is looking good. Well, I'm looking bearish for the week. Bullish temporarily, just so price could come up in here, do what it got to do, grab its liquidity and all that little good shit. And then this right here is the long-term target. These relative equal lows. So let's see if price gives us something in this area that is aligned with it running down here. And that's my anticipation. If we do that, I'll capitalize, have some fun with it. That's what it's about, is having fun. It ain't about making money. You want to have fun with it first. Making money is a byproduct of having fun. So that's where we at with it. All right. I'm out. Until next time.